All right, we're pretty heavy into these journal entries and the journal and the chronological listing and what have you. But let's stop and consider this question. At any given time, can you answer this question with your accounting system? How much cash do I have right now? How much cash do I have right now? What was my cost of goods sold in the past year? What's my accounts payable balance right now? I want to know how much I owe to people. The journal, which is a chronological listing, boom, 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 the journal in debit and credit language, can be used to answer these questions only with great difficulty, because you're going to have to sort through dozens, hundreds, thousands, millions of transactions to say, okay, which ones were cash and which ones were this. So the journal really can't answer these basic questions like how much cash do I have? You'd have to sort through millions of things to figure that out. So the journal, as beautiful as it is, can't be the end of accounting. There's got to be something else. So now we're here to address the notion of an account balance. An account balance is, okay, up to now, what do we got in there? Where do we find these account balances? How much cash do I have now? What's my total cost of goods sold? Well, we got to look in another book called the ledger. A ledger, think of it as a book that contains a page for each account. And in the old days, it was a book. You had two books. I remember working when I was a young student. I worked at a company, a doctor's office. We had one book. It was the journal, where we had a chronological listing in debit and credit format of all the journal entries of what happened in the business, this doctor's office. And we had another big book, which was the ledger. One page for each account. So all the cash stuff was on one page. And all the accounts payable stuff was on one page. So the ledger is a book. Now, these days, of course, in computers, it's going to be a file somewhere. But it's useful to think of the ledger as a book containing a page for each account. So for cash, for example, we'd add up all the debits or increases to cash and all the credits or decreases to cash, and that the difference between those two, the increases and the decreases, will tell us how much cash we got right now. With cost of goods sold, we take all the debits. More expenses means less equity. We say there's how much cost of goods sold for the year. With accounts payable, let's take all the credits, increases to accounts payable, all the debits, decreases to accounts payable, and we'll look at the difference between those two, and it can tell us right now what's the balance in accounts payable. So the balance is taking all the debits and credits that have happened, take the net effect of all of them, what do we got right now? And we're going to find that in the ledger.